Hi, everybody. Adam Taggart from Peak Prosperity here. We've had a lot of new people watching us over the past couple of weeks due to the coronavirus, and you may not be aware of what we normally do here at Peak Prosperity besides talking about pandemics, but we spend an awful lot of time talking about the unsustainable nature of the economy, particularly the financial markets. Over the past 10 years, the financial markets have been becoming increasingly overvalued, largely due to central bank intervention, stock buybacks, et cetera. It's a warning bell that we've been ringing for a long time, particularly recently. And in the course of this coronavirus crisis, this looks like the coronavirus might be that black swan that triggers the larger market crisis that we've been warning about for the past several years. So here to help us make quick sense of it, because we want to make sure that it doesn't get short shrift in amidst all the daily updates that we're doing around the science and the spread of the coronavirus, I'm meeting with New Harbor Financial here. Now, the folks from New Harbor are the financial advisor that over the years we have referred people to that see through a similar lens as we do and want their money managed in a similar way. In other words, these are people who are concerned about current market overvaluation and really are looking to preserve capital and protect it from a potential painful market correction. And so the folks at New Harbor have been following Chris and myself since the early days of the Crash Course, when the original Crash Course video series was being issued chapter over chapter back in 2008. So we've been working with them for about a decade now and have sent an awful lot of customers their way. They've provided great financial advice to those folks. Anyway, so I'm here with Mike and John, Mike Preston and John Lodra, who are the two lead partners from New Harbor Financial. Hey, Mike. Hey, John. Thanks for joining me on such short notice.
Hey, Adam. Thank you.
Hi, Adam. I'm John. That's Mike, and pleasure to be with you here today, Adam.
Great. Well, thanks for joining, guys. I know it's an incredibly busy time for you guys, given the current market meltdown that's been going on over the past week. So I really appreciate you taking time away from the tape to talk with me here. And this will be very brief. We'll just talk for about 10 minutes or so here. I just want to make sure that we are giving our audience sort of the best current thinking from you guys and giving curious folks an opportunity to learn how they might be able to talk to you if they want to. So to kick things off, guys, the market has corrected pretty violently over the past week. Really, it's just been the past week. It is these, if I understand correctly, and I'm going to put up a chart here, I believe that shows this. It is the most violent. Let me put it this way: it's the fastest 10% drop in the market on record. So, as you've been watching the action, guys, what's been going through your minds? Is this something that you've been expecting? What are you watching at this time?
Yeah. Well, I mean, actually, it was unexpected in the sense that, I don't think 3 months ago any of us here were expecting the news flow and the concerning news flow regarding the coronavirus, but very much expected by us in the sense that markets have become tremendously, egregiously overvalued and have been for several years, frankly, in the context of things. So, it's kind of the analogy, you might have heard it plenty of times. It's kind of like a open can of gasoline next to a crackling fire. You don't know what spark is going to set off the flame, but any spark will do. So this just happens to be the spark that, we think has created a catalyst, but it's certainly not, I don't want folks feeling that if not for this coronavirus, that there wouldn't be ample reason for markets to sell off. Maybe not so swiftly, but way overvalued, and we still remain tremendously overvalued even with this pullback relative to historical norms. So we've begun a process, we think, that is going to likely create a lot of volatility, both up and down, but the prevailing trend we believe is going to be downward, substantially so.
Great. And one of the reasons why we have worked with you guys so closely over the years is you have a very strong focus on risk mitigation. You prioritize preservation of capital over, speculative stretching for gain. And I know that's been hard to do in this market because up until recently, that's where the easy money's been on the speculative side, the folks that have just gone long and believed in this crazy market. And you guys have held strong to your principles and your convictions there, which we've really appreciated. So whenever the market drops like this, I always love to check in with you guys to make sure that your model is indeed delivering the results that you expect it will. So we just talked about the market being down, 10% over the past week, roughly. I don't need an exact figure, but how has the general New Harbor portfolio performed over that same period?
Yeah, as of yesterday's close, the market from its recent high, which was only last week at this point, last Wednesday, the 19th, I believe, the market was down about 12%, a little bit more as of this morning. We've been essentially flat. We're very conservatively postured. We're opportunistic, and our portfolio is flat over that time period.
All right, that is great to hear, because that's exactly one of the main reasons why the people we refer over to you want to work with you guys is they're very, very intent on not losing money, or not losing their shirts, at least during a market downdraft. And it seems like you guys are continuing to do a very good job on delivering on your value proposition there. Okay, so guys, market down 12% as of yesterday. It was down even more this morning. I haven't looked at it in the past hour. It looks like it's bouncing a little bit. But what do you guys see going on from here? Do you see this as a short-term blip in the overall continued decade-long bull market going on, or do you think that something fundamental has shifted here, and that probabilities are more to the downside going forward? What are you seeing right now from your view?
Yeah, we definitely think something has fundamentally shifted. Certainly, the coronavirus news now, we don't believe it's being overhyped. In fact, we think it's being underhyped by most mainstream outlets. Not just because of the health aspects, but the global supply chains we're hearing frontline evidence of supply chains becoming really stressed and broken in some cases. You think about consumer electronics, for example. There's tremendous amount of componentry that go into almost every electronic product that in some way is sourced very heavily from China and affected areas. So it's undoubtable to us, undoubtedly going to have an impact on economic activity from our standpoint. So that's changed. We think fundamentally there is a dramatic change in risk psychology, which is frankly the bigger factor, we think, right now in terms of inviting or creating a sea change in directional moves of markets. Mike can maybe comment on some of the short-term things we're seeing here and what we might expect short-term here.
Yeah, I mean, we saw a very, very complacent market that's ridiculously overvalued because of central bank policy has caused investors to get really complacent. We've seen volatility indexes like the VIX at really near all-time lows for a very, very long period of time. All of a sudden, a trigger comes along, or a pin, if you will, and creates risk aversion. So, volatility, the VIX had moved from 12 or 13 right up to about 48 as of this morning. Now, we think this market has been overvalued, way overvalued for a long time. And even with this 12% drop, it's still very overvalued. However, that's not to say we're not doing anything. In fact, we're opportunistically doing some things in our portfolio. In fact, we did something this morning. Because of the fact that volatility is so high, options premiums are very, very high, meaning the people looking to buy protection are willing to bid up the price of options, both on for call options and put options. And so our strategy right now is to take advantage of that. And we took advantage of that today by adding a small piece in the Dow, and it could be the S&P. Either one of them doesn't really matter. But we added a position less than 10% in that index in our accounts. And we did that essentially by selling put options. We don't use leverage, and we're going from essentially 0% stock allocation to something less than 10%, higher than 0, but less than 10%. And we're doing it by capturing premium. We could continue to go down from here. We could crash on Monday morning for all we know, but we have the tools to respond to that. We can adjust the options. We can sell more options. We really think the way to approach this market going forward, and this whole market cycle, the back half of this market cycle that we're in, could take 1 to 2 years to play out. And we'll continue to use options to start layering into the market as we see lower prices. Hopefully we'll see lower prices going forward, because that's really where the opportunity lies. Hasn't been much opportunity for a long time up at these levels. So we took action today. We stand ready to take further action. We don't have to wait for the ultimate crash to take action. But this is the first time incrementally we've seen to take any action at all over the last year and a half.
Adam, I'd like to emphasize quickly a couple points. We would not at all be surprised a pretty furious bounce from this really short-term oversold condition. Could be any number of reasons, just the fact that things have sold off so quickly. But, there's very good reason to believe, based upon past playbooks, that we may see some pretty heavy jawboning or, market assuasion going on by a coordinated central bank response over the weekend. So would not be at all surprised to see some kind of, come to the rescue messaging on the part of our Fed and other central banks. And that, may very well be good for a very knee-jerk spike higher. But we think that's likely to be short-lived if that were the case. So one point I'd like to make is for folks that feel like maybe they were more exposed to the stock market in retrospect than they wish they were. 2 points. It's not too late to get more conservative in our opinion. And especially when you tune out from the very short term. And certainly if we do get a fast bounce here, that I think is very much a second chance for folks that are feeling regret of maybe being more exposed to markets than they wish they were. Would encourage folks to be very, very proactive and using that as I don't want to say a gift, but an open door to do what they wish they had done some time ago.
That's a great point, John. So somebody watching this were to reach out to you today, what should they expect? What kind of conversation would they have with you here?
Well, like John just said, the markets are down 10 or 12%, depending upon where the market's closed today. We expect the market to lose more than 50% before the whole the next bear market, if you will, or the back half of this market cycle is done. So there's lots of time to reallocate, particularly on a fast and furious bounce if we get it. If folks want to reach out to us, we'd be happy to take a quick look at their portfolio with them, help them de-risk it, help them reallocate. We can even help them, we'll give them our advice on when and how to do it. If they're not our clients, they can do this on their own. They can do it with their current advisor. Certainly, if they end up working with us, we could end up doing that for them as well. But our real objective here would be to get them reallocated to the way that they want to be for their own risk tolerance, so that they can feel more comfortable. We'll help them do that immediately, even if those assets are not with us right now.
Great. And we should say that all that conversation, that portfolio review, everything you talked about, that's all free of charge. It doesn't require any sort of commitment to work with you guys. Reason why you guys are willing to offer that is because of the relationship that we've had, Peak Prosperity and New Harbor, over the years. We've put that relationship in place because we really want to help people. That's what we're trying to do here through Peak Prosperity. So in closing here, guys, thanks for the time. The continued, recommendation from Chris and I is, look, the markets have been crazily distorted, as we've been talking about here. We are beginning to perhaps see the point of inflection where we go from the decade-long overly exuberant bull run to maybe now we're actually coming off the top of that, and we're going to see markets decrease down to levels where finally maybe fundamental valuations begin to make sense again. And we still have a long way to go before that time. So it's a time to really look at your plan, put together or renew the plan in a way that you feel good about, you feel confident that your portfolio is positioned the way that it needs to be, and work with a professional portfolio advisor to do that. We're actually impartial whom you work with, but if you've got a good professional, work with them. But if you don't, and a lot of people don't, or a lot of people to date have been working with sort of your traditional buy and hold, don't worry, stocks for the long run, market's going to take care of you, markets always go up. If you're working with that type of broker, and maybe you want to start working with a broker that looks through the same type of lens that the folks at Peak Prosperity and New Harbor look through, this is a good time to reach out to John and Mike here, have those initial conversations, get their feedback, and determine what you should do after that. So guys, thanks again for the time. We'll make sure that as people are watching this, when we do the editing of this video, we put the Greylock Peak URL, which is the URL in which people can request one of those free consultations with you guys. We'll put that right there on the screen so folks know how to do that. And guys, I'm going to let you get back to watching these markets, but thanks again for all the work you do. Really continue to be extremely appreciative of your risk managed approach. Love to hear that you guys are flat given the markets being down 12% yesterday, as of yesterday. And just continue what you're doing. You're doing a great service.
Thank you, Adam.
Thank you, Adam.
All right. Have a great weekend, guys.
Okay.
You as well.
Good weekend. Thanks.